Let's dive into the top 5 reasons why traders fail in the markets. You've all heard it. 90% of traders over time, in a 1 year period to be exact, that's where the statistic comes from, lose money. And it's absolutely true. So if we can identify the reasons why traders fail, then we know what not to do. So let's dive into it. And I first want to show you these two schematics. So you may have seen it before. We have the Dunning-Kruger effect on the left, and we have the consciousness matrix on the right, where you dive into consciousness and how it relates to competence. So these are two similar schematics, and every trader starts off really with the same path. So it starts off knowing nothing, and then you have some sort of win in the markets. This is usually what gets you even interested in trading. It's seeing the green gains that you made, which is purely out of luck, but because you have unconscious incompetence, you are unaware of the skill that you're trying to build, and you're unaware of your lack of proficiency as a trader. Your confidence is actually really high, despite you knowing nothing, because you've seen that green P&L. Or maybe you've taken a trading signal from someone and you made money, and all of a sudden, for the first time in your life, you've made money from clicking buttons on a screen. That's a lot for your brain to take in if you've worked a 9 to 5 your whole life or built businesses your entire life. And that is why every trader begins at the peak of Mount Stupid. You don't know what you don't know, in other words. And eventually, the markets humble you. The markets will always humble those who do not respect it. So, from there, what happens is you likely risk too much money in a trade, or you continue copying signals of someone else and you eventually run into a losing streak. Because losing is part of the game, even as a winning trader, but if you don't manage risk or don't understand risk management, that can be catastrophic. So that's when you enter the valley of despair. You know nothing, your confidence is now low, but you have conscious incompetence. You're now aware of the skill that you lack, but you're just not yet proficient at it. So now you know what you did wrong. You're past the stage of, in other words, delusion. And this is a great place to be, and really is the pivot point for traders where they either quit or they develop a love for the game, an obsession with trying to work out the game, which, by the way, you never fully work it out ever, in which you start to increase your competence slowly from knowing nothing, and your confidence can begin to gradually rise as you put the work in, you put the reps in, because you're now aware of the skill that you need. You're just not yet proficient because you haven't got the experience and the reps. So this is when we start to head towards the slope of enlightenment. Competence is increasing and aligning more with your confidence as that also increases. And this is where we enter conscious competence. So you're able to use the skill, but only with effort. It's not yet natural. It's not yet super efficient. You're having to grind your way through to improving as a trader, but you are indeed improving. And from there, you reach the plateau of sustainability. This is when you've mastered the art of building systems, mastered risk management, understand that you don't know where the market is going and that you don't need to know where the market is going to make money as a trader, and understanding how liberating that is. You simply follow your back-tested, live-tested systems, believe in the law of large numbers, and let it play out. And you always respect risk management, because you know no one day in the markets can make you rich, but one day in the markets can lead you to losing everything if you don't respect the market. So this is where you start to develop unconscious competence, where you're performing the skill that you need and it's starting to become automatic. And this is where you really benefit from the economies of scale. You can now build systems easily, and because you can do all of that basic stuff without much effort, you can now really sharpen your edge and focus on those little things that can massively improve your performance as a trader. So that's the path, the journey of every trader. Everyone's somewhere along this journey. So, what are the reasons why most traders fail? Well, I'm going to give you 5 that I think sums it all up. It's going to be the absolute core reason. So maybe not what you expect. And it starts off by having no financial plan. Aimless actions lead to aimless results. You can all become a very successful trader in the markets. But if we look at athletes, for example, how many times do we need to hear about the story of XYZ athlete who made millions and millions of dollars in their career and then became bankrupt only 5 years after they retired? So, what does that teach you? It's not just about becoming successful as a trader and making a bunch of money. You also need to learn how to keep said money. What's the point in becoming successful if you don't know how to keep it? And a financial plan is what keeps you grounded in managing your overall long-term wealth as a trader, managing your success so that you stay successful. And what you need to do is create smart goals, specific, measurable, attainable, relevant, and time bound. That means you can measure your goals, you have real targets. It's not aimless, it's specific, it's something you can actually achieve. So you're not trying to grow a 5 grand portfolio into 5 million in 1 year. No, everything is absolutely attainable. It's always going to be time bound. So you set a 1 year, 2 year, and 3 year goals. That's what I personally recommend anyway in your financial plan. And overall, the financial plan needs to track your overall income per month. It needs to track your overall expenses per month. It needs to track how much you allocate into your portfolio every month if you are earning an income in that example. It also needs to track your overall portfolio performance every single year. Have some sort of goals that you want to hit. You then need to audit it every year to see if you achieved those goals. If you did, what went well? If you didn't, then you need to look at why did you not achieve them? Only if we are accountable with our finances are we going to be able to have success with our finances, because everyone wants to plan their gym workout, the meals they're going to eat for the day. But when it comes to financial planning, people just want to wing it and expect to be financially successful from winging it, even though in every other area of their life, they don't wing it. It makes absolutely no sense. So having a financial plan should be your absolute core as a trader, as a businessman, as anything, if you want financial success that's going to be long term. So maybe not what you was expecting as number one, but this is actually the most important reason why most traders fail over the long run. So you need those goals, you need those targets, you need to be accountable, because nothing will keep you more accountable than the markets, because there truly is no hiding from the markets. It's almost the truest form of accountability. So we must practice accountability absolutely everywhere we can. So that's number one. Now, moving on. No trading system. If you have no structured rules in the market as a trader to enter your longs and shorts, then it's not repeatable. And if it's not repeatable, then how can you get consistent profits from it? And if you can't get consistent profits, you can't become consistently profitable as a trader, which is the aim. So lots of traders, they enter the market, long or short, based off perhaps a YouTube video they've seen, a tweet they've seen, some news they've seen, or just their overall feeling from the market. Or maybe you do look at some technical analysis and you do roughly enter based on what you're seeing. But overall, if there's not an objective rule to that system that maps out your entry, stop loss, and how you're going to take profit, then you simply cannot repeat something that is not structured at all. So almost 80% plus of traders fail simply because they do not have a system and they're just trying to wing it in the markets, even though the markets are the hardest game in the world. And who's going to win? Is it going to be the trader who just walks in thinking, yeah, I'll go long or short based on whatever random technical I've picked for the day, whatever random news I've seen for the day, or the trader who's built a system, back tested that system through 100 data points, live tested that system for 30 data points, understands the system fully, has done deep research into all of their data to really tweak their system? Who's going to win? When you put it like that, it becomes very simple. It's the person who's put in the work, like anything in life. They're going to beat the trader who just walks in hoping to make money, because it comes down to one trader there respects the market and the other trader doesn't, and they think profits are just going to come easily. Next up, no risk management. This increases the probability of catastrophic losses. Remember, no one day in the markets can make you rich, but one day you can lose it all if you don't adopt correct risk management. People end up revenge trading, thinking about the money. They end up taking way too many trades that aren't systemized if they get themselves in that downward spiral. And that leads to the biggest mistakes in the markets. No one ever wrote a big post about how they lost everything in the markets following their systems with 1% risk per trade. You've never seen that. It's always, I got too cocky. I started risking too much per trade, or it was, I didn't have any system, or it was, I moved my stop loss and I kept adding to this losing position with no real plan. That's how it always goes. Again, it's never, I used a stop loss as per my trading system rules in every trade with my risk managed at 1% on each trade. No one ever said that. So risk management is a key lesson in there. In trading, if you don't survive, you're out the game. You can be the best trader in the world. It does not matter if you do not survive, because your capital is your oxygen. It's what keeps you alive in the markets. Next up, emotional decision making. So reacting to feelings rather than executing your data-backed systems. And it links to number 2. Lots of traders, they trade based off FOMO very often, especially when they see news going viral. They become the exit liquidity. Instead of trading based off something that's backed by data, they trade off their own hunch and emotions. And remember, you cannot backtest your emotions. It's not repeatable. How can you create that exact feeling you had in the moment, backtest it, get the data from it, build a system out of it? It's just ridiculous, right? You cannot make financial decisions based off your emotions. That will never go well in the market. So 2, 3, and 4 essentially get solved by building a system. So here's an example of a system. Entry rule. So it's what conditions must be met before you enter. So that can be when the daily 12 EMA crosses the 21 EMA, for example. Exit rule. So you take profit. What conditions must be met before you exit? So for example, when the daily 21 EMA crosses the 12 EMA. Invalidation rule. Where are you wrong in your position? Below the daily 50 EMA. And then risk parameters. How much do you risk per trade? And that can be 1% of your trading portfolio, again, in this example. That is a very basic example of a system. But what does that solve? Well, now that you have a system, you have a rule for where you're wrong in the trade, you have your risk parameters. Now that solves 2, 3, and 4, because by building a system, you know where you're wrong in the trade before you ever even enter it. That means you can position size your trade such that you only lose 1% of your trading portfolio per trade, which is an amount that you're happy to risk. So you're managing your risk. And it's only that objective rule that a system gives you, which allows you to actually do that. And if you're following your objective rules, it's not emotional. So that removes number 4. All by simply having a trading system as shown. Now, these things, they all sound good in theory. And I think all of you listening would agree that everything I just said, Those pillars are important. So why do traders still fail in the markets? Because all of you would agree that having a system, having risk management, not taking emotional decisions is very important as a trader. So why do traders still not do it? Well, that brings me on to number 5. Most traders, they're chasing fast gains instead of focusing on slow compounded growth. This is even more so highlighted in the world of crypto trading. Everyone sees the big tweets of one guy making 100x. You don't see the 999,000 who all lost their entire net worth taking the same trade. Survivorship bias is everywhere and it clouds everyone in crypto. Because people generally get into crypto, let's face it, because they want to make more gains than what traditional methods would offer. And crypto does grant that, but only to those who deserve it, only to those who respect the market, not to those who are focused on the money, trying to get a 5x, a 10x, or 20x. And essentially, what is that? It's telling the market what to do, telling the market what to give you, and the market does not know you exist. So if you don't respect the market, yes, 1 in a million of you may get that 100x by risking too much on trades, by going full net worth into some very low cap coin, hoping for the best. But hope is not a trading strategy. A 1 out of a million chance is not a trading strategy. And this is why most traders fail. And what you all need to know is that you become successful as soon as you realize the slow way is the fast way, because the slow way is the only way. It's not about getting rich quick. It's about getting rich for sure. And the secret sauce in trading comes down to compounding. It always has been compounding. That is generally the magic. But compounding needs a key ingredient called time. And time in the markets requires you to survive. And if you're going to survive, you have to have correct risk management. You have to have a system. You have to have a financial plan. You cannot operate on emotions. Hope is not a strategy. And overall, you cannot chase those fast gains. It's slow gains, chipping away month over month, year on year, understanding that surviving is a full-time focus. So the big years, they're going to come. They will both come and go. But as long as you survive, you will do okay, as long as you have your system and all those other things mentioned today. So they are the 5 reasons most traders fail. Let me know if you agree with those.